Ja, herzlich willkommen, liebe Cap Insider, zu einem neuen Special hier bei uns auf den Social-Media-Kanälen. Und natürlich geht es auch in diesem Special, wie in der Überschrift schon gesehen, noch einmal um den Ukraine-Konflikt und was das für Auswirkungen hat. Die Nachrichten dazu reißen nicht ab und ja, wir sprechen mit den Finanzexperten darüber, was das für Auswirkungen hat. Und ich freue mich sehr auf unseren nächsten Interviewgast. Great welcome to Mikael Gjerding, Analyst at Sissener. Hello.
Hello.
Where do you call us? Where are you now?
I'm in Oslo, in Norway.
All right. And do you want to give us a small or quick? Do you want to give us a quick introducing about Sissener?
Well, Sissener is a independent family office asset manager based in Norway, running two funds: one long-short equity hedge fund and one corporate bond fund, mainly investing in Nordic corporate bonds, but also with a global focus.
Yeah, all right. So the Nordic high yield bonds, you mean? Yeah, all right.
Exactly. Yeah.
Yeah. Before we start with an analysis of the markets, what is the position? What is the mood in Norwegian politics or in the Norwegian people and society about the Ukraine-Russian conflict?
Well, it seems to me that it's pretty much equivalent to what we experience all over Europe. I think it's a very sort of broad-based in the political spectrum in Norway to condemn the actions of Russia. Norwegian government has also decided to contribute with military equipment, and as of yesterday, also weapon to the Ukrainian side. So I think that our response here in Norway sort of follows suit to what we experience in most of our sort of neighboring countries, including Sweden and Finland. And just as a reminder, most of you probably know, but Norway is also a member of NATO, unlike Sweden and Finland specifically.
Yeah. So for the whole Scandinavian zone, how do you assess the economic impact of the sanctions issued so far? Which scenarios do you see from the Norwegian view of the conflict?
I mean, number one, it's very difficult, obviously, to sit on the outside and have a very sort of qualified opinion about what is going on among Russian decision makers. It seems to us that sanctions are sort of well functioning. They're pretty harsh by nature, and one can only hope that sort of they will contribute to put pressure on decision makers in Kremlin, sort of through affecting the public domain, but also keep personnel close to Putin. And let's just wait and see if that works. I think that for us, it's sort of one key effect being sort of Norway being a petroleum economy is the effects of the gas and oil prices on the global market space as a result of the ongoing development in Ukraine and Russia. And when it comes to scenarios, whether we're talking sort of about an abrupt end to the conflict as a consequence of sort of internal forces driving it, or sort of a prolonged situation, I think it's very important to sort of to be very, very honest with oneself and say that it's difficult to assess this sitting in Norway and potentially also in Germany, for what I can assess, and to sort of have a portfolio and a view of the world which works well sort of in most scenarios. I think that's our key take for the time being, and we just have to compose the portfolio in such a way that it works in most sort of circumstances.
Yeah, and what do you expect belonging to inflation rates, interest rates, economic growth, energy prices in Norway, in Europe, or global? What will this increase?
That's a very good question. Going into 2021, we were pretty concerned with inflation in general. We were expecting inflation to sort of to start to bite, and that to essentially result in higher interest rates during 2021. So I think it's fair to say that we're somewhat early. Our thesis didn't really play out until the beginning of 2022, but we sort of see that as the economic backdrop even before the current conflict sort of got elevated to the level we see today, even though there were signs of this to some extent starting already autumn 2021. It wasn't sort of a key topic until relatively recently. But so I think it's fair to say we have been pretty concerned with inflation. We've been concerned with interest rates for some time, and obviously what's going on now is affecting that and essentially also sort of contributing to place even greater stress on the Federal Reserve, which we sort of think from a global marketplace is so key going forward, because it's even more difficult for them to navigate. The higher oil prices, it's our thinking that can potentially contribute actually to take some stress off the other components of the inflation metrics. Is obviously that energy inflation will continue to persist, with oil price being above $100 per barrel, gas prices soaring and everything. But the question is if that will sort of drain liquidity out of the market, such that the sort of consumption on other areas is somewhat constrained, and in that respect sort of maybe work in the same way as increased interest rates would have worked. So it's very, very fluffy. It's very sort of a lot of moving targets and very difficult to sort of navigate in these waters.
Yeah, and to look in the near future. Yeah, the Norwegian Sovereign Wealth Fund is also starting a divestment strategy of its Russian assets following Russia's invasion of Ukraine. The EU made sanctions on the financial side to the Russian. You are with Norwegian. Norwegians are not in the EU, but close to us with Schengen, with the European Free Trade Association, EEA. Is the Russian economy now in a sell-off from UA and Norwegians too? Which effects do you predict for it?
As I said earlier, it's difficult to sort of to form very sort of precise opinions. So that's it sitting on the outside, but it clearly sort of from what we can observe, it clearly seems like it's in a sell-off. It's not only the sovereign wealth funds, but it seems to be sort of also political pressure and commercial pressure for companies to sort of divest or freeze their Russian operations. So it's obviously sort of doing transactions in and out of rubles will be more difficult. So you see a lot of these examples. So I mean, if we had to make a statement, I would clearly say it's in a sell-off territory for the time being. Yes.
Yeah. All right. So in the let's close with a view on Sissener. You're investing in corporate bonds. You tell us in the beginning with the focus of the Nordic, European, and US markets. How are you and your investment strategy responding to current developments and maybe the next time?
Yeah, that's a good question. And as I said earlier, I think that we sort of in our sort of investment philosophy and thesis, we have emphasized inflation. We have emphasized increased interest rates going, way before also the current conflict became dominant. So I think that our view sort of the future is that we will continue to see more inflation. We will continue, and then to a large extent energy inflation. We will continue to see that materializing into increased interest rates, maybe somewhat slower than what people expected 1 month ago, but still interest rates to be on its way up. We continue to see sort of energy prices going through the roof with a pretty sort of hefty demand side and not supply. So this is both in the short term and medium term, and also potentially long term. So I think that forms our sort of thinking around our investments. So we have for some time sort of preferred floating rate notes, which are not exposed to the same extent to interest rate hikes. You actually benefit from interest rate hikes being exposed to most bonds in our portfolio. We prefer companies with demonstrated pricing power and larger issuers, preferably with a listed equity, not always. And this is to ensure some kind of liquidity in names, because you see a lot of sort of issues in the Nordic high yield bond market, and to some extent also European, which is less liquid of nature. And we think that with increased volatility we see as a consequence of the current sort of geopolitical developments, we think that sort of being as liquid as one can be is of importance also to provide visibility to investors in our fund, and sort of some kind of security that you can go in and out of positions without taking a too big hit sort of through the bid-ask spread. So that's the key focus for the fund going forward. Yeah.
A long key, we know, and it's not that simple, because it's not that simple problem we have to solve at the moment. So thank you very much, Mikael Gjerding from Sissener, analyst from Sissener, and greetings to Norway, to Oslo from Hamburg.
Perfect. Thanks for having the opportunity to speak.
Yeah, thank you very much.
Cheers. Bye-bye.